When we're talking about important topics du jour, insofar as the market is concerned, I mean, it's hard to get really escape from some of the things that we're seeing play out in terms of the gold market. Currently, we're sitting here. This is October the 15th when we're recording this, and I think it's extremely important that I mention the date because the price of gold might have shifted materially by the time we record this by the time most of our audience has seen this video. And right now, the spot price for gold is just below 4,200. Now, that's quite a dramatic change from where we were a month ago. And again, we could talk a little bit about some of the factors that have been driving this latest leg higher in the price of gold. But what's driving the price in the here and now? I mean, look, the reasoning in terms of fundamentally why gold prices have been pushing higher, they're fairly consistent with what we've seen during prior upswings in the price of gold. Again, this feels like an extension of the debasement trade, whereby financial assets are rallying, whereas the nominal value of the US dollar is declining. Now, there's also the element of the fact that the Federal Reserve has begun or restarted its easing cycle as of the September FOMC meeting. And that could mean that at the margin, the opportunity cost of holding gold is now lower for a lot of the institutional players in this space. And also, to a degree, there's a concern about the trajectory of long-term inflation, though we'd be remiss if we didn't mention that, if we look at inflation swaps, which are a key barometer in terms of what the market is pricing in terms of inflation expectations for the coming years, those are still somewhat well behaved. But nonetheless, there is a more palpable sense that inflation, at least at the very over the near term, will start to move higher, and that is that could be something that is sort of lending a supporting hand to the way that gold prices have been moving. But from a flow perspective, and I think this is especially important to take note of, is the fact that one notable difference about this rally relative to what we've seen in prior years is the fact that total known ETF holdings of gold across the global landscape have increased, whereas between the periods of 2020 to 2022, they're actively going lower.